started. So like the first thing I do every day is like a daily debrief. So so I do a debrief. So that's just for me every day, talking about. I go over what I've seen in the market, and kind of like tying this in with price action. Like, so I mean, for me in the debrief, it's about like, so I'll talk about intraday flows. So I'll specifically note down in areas that I was trading or watching or specifically interested in. I'll be noting down kind of the reaction we saw there, what type of price action it was, any kind of abnormal sort of reactions or whatever. And then tying into this is kind of like, from an intraday point of view is like, so if I do like a sub of this, I guess we can do like this, will be like your feelings, how you're feeling and sort of self-talk. I know we talk about this a lot, I talk about it a lot and everyone else. But I just kind of think, especially this as time goes by, this will kind of sink in a lot more as to sort of what reactions, like specifically when you're kind of in an uncomfortable trade, I tend to find that these uncomfortable trades are usually the ones which are the most profitable for me. And also, for example, like if you're going through a period of consistently, feeling uncomfortable and disjointed with the price action, like when it finally does loosen up and it gives you that other kind of feeling, or, the way you kind of taught yourself is a lot better. I mean, you can kind of take more size on it, which is something I'll get onto later. But yeah, I mean, just general feelings is how and then using that as to kind of work on it. So like, right, okay, when it's like this, I need to be a bit better at, understanding what it's doing, not being so like kind of aggressive with the market, being kind of a bit easier on myself, all these type of things. And then secondly, in my Evernote, I note down reoccurring patterns, and this ties into this first point that I made. And for me, when I kind of note down reoccurring patterns, a lot of them come from this. So like for me, my debrief, I mean, I'd probably say 90% of everything that I kind of take, high risk, well not high risk, I leverage up on a lot of plays which have come from debriefing and that I've kind of used to lose money on quite frequently. So for me, this is really important. And what I kind of do in breaking down my recurring patterns is I then kind of get to grips with when they best work in terms of what kind of auctioning environment you need. So when they best play out is kind of the way I like to put it. Because for me, being someone who literally would just only trade off the price ladder, not really kind of taking anything, more than like what was actually kind of going on in the ladder at the time. I kind of came across, being able to when I started to develop this side of my game, I would then like smash everything, like every pattern I saw, every little thing, but without really taking in what the book was doing, how it was trading, which is something which I was a lot better with prior to doing this. So it's really important to know when they best play out, because you can have like your A-star play and you can't take as much risk in it purely because the environment is not great. I mean, you had an example of it in the Bund today, there was a player which I was really convicted on, took the trade, you went on side however many ticks, and then it came back and you took a lose on it. It's like, okay, well, there was a lot of signs to show that the play was going to work out, but just bearing in mind you've been tracking the Bund and how it's been trading all week for the last 2 weeks, it's been really locked up, really blocky. On a Friday, is it going to change? Not that it can't, but is it going to change? You really need to see it change. You know what I mean? And that's just kind of the whole premise of it. Like for me, it's like you can still take these plays, but perhaps you're maybe trading a clip instead of 2 clips, 3 clips. That's just kind of how I like to look at it. And you're a lot tight on the risk. So for me, going into that trade, I was always very not hesitant, but willing to be paying up quickly. You know what I mean? So when it started to fail and when you didn't get the reaction you saw. And finally, my last point is, so I use this information, so kind of like what I was getting onto. So I use this information to leverage and deleverage. I'll do to leverage. Oh shit. Leverage. That's terrible. Leverage. I'll do up and also because you need to know when to leverage down as well. So like, you know, for me, I mean, there's been a lot of opportunities, I think, or like potential opportunities present themselves in the Bund, but you have to be in any market really. But like this goes for all markets as well, by the way. This is not just, you know, you really need to do this with everything that you trade regularly, especially when you go from say trading one market to then trading a new market. So, but yeah, like this information to leverage, right? So I'll give an example in the S&P. I mean, I've personally been watching the S&P kind of like probably unhealthily for the last 2-3 weeks, like, you know, being here really late and everything. But for me, it's been really important to like get a feeling as to like, okay, when does the price action shift? And when it does shift, I'm really going to leverage, right? I'm really going to take a lot of risk, because anyone who's been watching this market trying to bid or breaching areas where you feel there should be a distinct reaction, i.e. for me, the S&P has been in this big sideways range. And when we're kind of breaching these extremes, when you're not getting the reaction you're seeing, whether you're expecting here, I mean, it's telling you information in itself. You know what I mean? The reaction that you're seeing in these areas, I mean, I'm just saying personally from my own experience, it's been bizarre. And it's kind of like when the market presents you with an opportunity and it's not actually going through with it, you know what I mean, in terms of, so like for example, a lot of these, so like for me, range expansion and range contraction trades are something which is like a recurring pattern, which I like to take a lot of size on. Well, when the S&P is doing it like this, right, but the reactions you're getting are just not what you expect. And for me, it's really, and like, for example, this week has been a lot of kind of paying for information, and I've kind of been gathering like, you know, just the nature of the bid and what it's doing. Like, I mean, because again, once it does shift, you really need to take the most out of it, and like you run it kind of thing like that. You don't, as much as it's been, because there's so many people who've been burnt, and like myself included, like an energy just sapped from this market because of how it's trading. That is really, you know, you need to be really, really committed to then saying, right, I'm going to take the size, and I'm going to, you know, I'm not getting out for a couple of handles. I'm running this for, you know, however many handles you expect. And I mean, and another thing is like why I also bring this up as well is because recurring patterns in some markets, i.e. like these big range expansion, range contraction trades, they don't work the same in every market, i.e. like the Bund. The Bund will do it in a very specific way and like a very like, you know, bespoke type of flow kind of thing like that. Same with the S&P, like, you know, the areas of which you can be involved in the SPOO may vary to the Bund, you know, and how you can kind of react and how much size you can take. I mean, it's very like, you know, you need to kind of be disciplined in like knowing which market you're doing it in for, and like being in sync with each market for each thing. So for me, I've been like, a lot of my time has been spent this week kind of feeling the SPOO, right? You know what I mean? Trying to get a feel for what it's doing, the type of participant in the market, you know, and just kind of being in sync with the flow and just writing it down every day. Like, you know, it doesn't take long, just, I mean, and it may sound like, well, you can see it on the chart, right? But like when you actually just kind of, it just, you know, in the back of your mind, it'll make it so much easier and like so much more instinctive for you to leverage up when it's just been writing down every week, every day. It's been doing this, it's been doing that. It started to change here, it didn't start to change here. So, I mean, these are kind of my 3 things really. And I think, and that's all I really do. I mean, I'll then kind of, you know, it's all kind of encapsulates what I write. I'll write a little, like maybe 3-4 bullet points about the day, what I did, you know, kind of all these things involved. And yeah, and just like, this is probably in terms of like what the most important, I mean, they're all significant and you need to do, but like this is one that just kind of come really important to me now. But like the only way you can get to this is when you kind of really do this, I feel. Like once you kind of build up like the patterns and like when they best play out, like this will come easier. You know, you'll be able to understand when you can kind of really take risk. If you've been tracking the price action over and over again, kind of like the comment on Tuesday in the Bund, like regardless of whether you thought it was big or whatever, like I say, there's a lot of comments, but like when you just see that energy step into the market on the sources, on the Novotny comment, like regardless of what you think it is, like you need to kind of, you can react to that and take a lot of size, like especially like, okay, similar again with the Bund being in a massive sideways. And we were trading mid-range, come the comment, and just when you saw the price action shift, like, and we had a lot of vulnerable lows and a lot of vulnerable highs, I would say less so vulnerable highs, but regardless, the energy that's in this market here, you can take a lot of risk here and have a high probability trade that this is going to, you know, a lot of leverage here, that this low here is at least going to go. I forget what the low was. And then had a second leg, and we pushed down to 05s before squeezing up and coming back again. But that was just, you know what I mean, I only took my risk on here really. I mean, I didn't sell that aggressively here, but this is just something that I need to work on, you know what I mean? Because, you know, just the having this, knowing it's been so slow, so blocky and all this, you can take a lot of risk here, a lot of leverage here in anticipation of this going. But also when it's so slow and so blocky, right, you need to then say, right, okay, when it gives you a certain type of move that quick, you need to then, you know, not be holding on forever sort of thing. And this is kind of another thing which I kind of learned on that day as well. But, you know, it's just identifying these shifts and just being in sync with it throughout the week. Yeah, I think kind of all these things line up really well. And like, you know, if I was to recommend anything, like, you know, for the first like year or so of me doing this, like I would watch my ladders, you know, a lot sort of thing. I'd record my ladders, watch them, you know, at least for the first like 6 months, I'd do it every day, maybe, yeah, a bit longer. But like when I, you know, it's just that type of like, that ingrains you into everything, and then you kind of feel, and then when you combine it all with everything, it all kind of fits in and kind of becomes a bit more fluid.